Good morning, traders. It's 8:01 a.m. Chicago time on the 12th of April, 2018. It's Thursday. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market is, the indices are higher. The market is allocating to risk this morning. The U.S. bond is down 6 ticks. The Bund down 9 ticks. The 10-year note is off a tick and a half so far. And gold has dropped about 1%, down $13.10. So clearly, risk is on this morning. That's the market's disposition. We pushed higher overnight in the indices and held on to those prices. We've hovered around the high of the session for quite some time, since about 4 a.m. this morning. So it looks like another day where the market's taking back yesterday's news. The 4 a.m. Chicago time release was for the Eurozone industrial production, which came in lower, but the market shot straight up. Correlation is not causation, as they say. Looking ahead for today, the calendar is fairly clear. We did get initial claims at import prices this morning about a half hour ago. You can look those up. We do have speakers coming out today. We have ECB Speaker Weidemann at 11 Central, 12 Eastern, and BOE Speaker Carney at 3 Eastern, 2 Central, and Fed Speaker Kashkari at 5 Eastern, 4 Central. So the point is the calendar's fairly clear for the day. The deck's fairly clear for the day. Let's take a look at what was expected yesterday. So yesterday, the bias for me was firmly to the buy side. We were opening right near Tuesday's low of 26.35. We're trading about 36.25. So we ended up opening at 39.5. We had a little pop on the open, which, by the way, you might have noticed that happens quite often, that we get a quick pop right before the open. But overall, the expectation is that any test lower from the open is likely to be a chance to buy. And that's basically what I did. I narrated the trade on audio on convergenttrading.com. It didn't quite accomplish what I had expected, but then again, the market doesn't have to do anything I expect. I have to adapt to it, not it to me. But overall, this is the bias was upwards. Was looking for it to get tangled at 26.56.5, and then end up breaching that 26.66.25 area into the close. It didn't. It ended up selling off into the close. Again, the market's influenced by news. The secondary scenario, which I set out to see is a lot less probable, is a test up into 26.47, and then the market falls right back out of the range of the prior day, a Tuesday, which would be pretty strongly against the longs. We would likely extend all the way down to 26.18 and then 26.10. That did not happen. Here's what actually happened. We got an open at 39.5. As I said, we tested 38.5. Couldn't really get past that, and we immediately went near the point of control before we turned back down. This turn down looked like we were going from scenario 1 to 2 in what I showed. Again, here's what I showed: scenario 2 pushing into that area, turning around, falling out of range. So the next thing I would want to see is it falling out of range, and then looking for it to start trekking its way down to 2618. So I'd look for the short on any pullback in that situation and look to hold to 2618 and then 2610 on the runner. That did not happen. The market instead consolidated, and then we had this little pop, at which point I was able to hop in right here, and it ended up extending to 61.75. The rest of the day, it looked like it would consolidate and continue higher, but the rest of the day, it just spent sideways. I mean, most of the afternoon was spent in this range here at 2654.50 or so, down to 2644. 10-point range that just chopped around. And what we ended up building yesterday, let's remove everything else. Look at what we built. We built this fairly odd looking profile. It's a very boxy profile with a just a very mechanically drawn profile, so to speak, with what looks like a value area. It's a valid value area, but the value area shows that price, there was consensus across the entire value area from 63.75 down to 42.25. There was complete consensus among those prices, meaning we would normally see a taper, a curve, a lot of agreement in the middle, and then a taper on the extremes. Instead, we're seeing a box. So we have a boxy profile, which indicates that participants saw value in the entire range. Again, that range is about 54 down to about 40. And we're trading above it right now. We're at 26.57. Let's bring everything back. 26.57. And so tough close, in my opinion. It did look like it was going to go neutral, which really wasn't an expectation. We've had several neutral days in a row, and it rested somewhere in the middle of the IB. So it looked fairly balanced with a very decent potential to extend the overnight low down. The overnight low didn't get extended down. I think it's 39.75 or so. Yep, 39.75 is the overnight low. So the overnight session ended up being right inside of this range. That's the overnight session. So what this is saying is it's a market that is, again, still jittery, trading across a pretty decent, 12-point range, and seeing that as an acceptable area. Equally acceptable area across all those prices. That's what the volume profile is showing. And the overnight sessions inside. Yesterday was an inside day. Yesterday was an inside day to the prior day. And as I mentioned in the Convergent channel, that expecting a pretty strong move out of here relatively soon. One of the things I want to cover before I go into the overnight session is the profile, the weekly profile, just to keep an eye on the bigger picture. In the weekly profile so far, we're on Thursday, so we've had 3 days, yellow, purple, red, being Monday, Tuesday, Wednesday. We've had a very fat profile combined together. We've had a very fat profile. But if we throw in the additional weeks before it, because they're overlapping, this week's trading inside of last week, and last week extended the prior week to the downside, but not to the upside. So the weekly is actually in a one-time framing down, with this week being an inside week. When we combine these 3 weeks, it takes us back to the 26th of March, and you could see that the consensus based on this profile, if we look at the gray, which is the volume, the consensus is acceptance of these prices across a very wide range, 2605 or so, 2603, all the way up to 2660. We have a very blunt profile as opposed to something that is showing acceptance at a point and then rejection below. Acceptance up here, rejection above, and so on. What we have this week is a profile that's saying, you know what, we have a lot of participants that are convinced that the future of this product is lower. We have a lot of participants who are convinced that the future of this product is higher, and they are participating across a wide price range. And what does that mean to us? Why do we care? What that could potentially mean is a market that can tip very, very easily. And so I'm telling you now that the next move out of here is likely to be fairly strong. I think there's a lot to resolve. There's still some chatter this morning from our president's Twitter account saying that we may intervene in Syria soon, or maybe not. And what that does is, it doesn't say much, but what it also does is it says to the market there's risk. And that's really what we're responding to. It's this, okay, we're all good, buy, buy, buy. Wait, no, we're not. Sell, sell, sell. And it's just back and forth, back and forth. People are trying to price risk in and protect assets, which is the main function of fund managers, is to protect their customers' assets, because without doing that, they're quickly out of business, right? And many have been. The overnight session. The overnight session is spent most of the session sideways into the European Open. And then, like I said, at 4 o'clock Central, it shot up, and we've been holding steady in this flag up here. So we've been stuck up here throughout the session. It looks like it's the participants at this point do not want to give up any of the higher prices. It looks pretty strong to me. The volume, however, is really low relative to other sessions, but in line with the long-term expected value here for the volume for the overnight session, which is around 110 to 125,000. Okay. And so that's what we're looking at. Okay. So also, I want to remind you, yesterday I talked about this LVN between these two big distributions. If you look at yesterday's video, I talk about that quite a bit. And I mentioned the price of 38, around 38 being the over underline on the overnight profile, and 38.5 was the low. You want to pay attention to those when you have a double distribution on a day or a night. It's really a very clear risk reward kind of line in the sand situation. You want to pay attention to those prices, and they generally play out early in the session if the market attempts to breach. It tells you what the sentiment is. If the market spent a lot of time below and it breaches higher, then it's likely to hold the higher node and continue higher if it's able to get through. So this is something that we're seeing today right here. Not as clear, but 2650 becomes that same. It's not really a very good line in the sand. It's just understand that it's occurring overnight, and the 500 equities that are backing up the S&P 500 are not trading, but it does provide a tattletales, what I would call it, a kind of a marker, high water mark or so, that tells us what areas to watch out for early. The overnight inventory is almost 100% long. We poked below just for a little bit. We poked below for just a little bit, but the inventory is long, and the expectation is we're likely to correct quickly. But I'm looking higher. Okay, I'm looking for this to go higher. So what is the plan for today? The plan for today is, guess I lost some of you, maybe my connection, not sure. The plan for today, open auction in range, out of value, expecting a dip, looking for a dip down into value, and then looking for a push higher on scenario 1. Okay, that's the primary scenario. I'm looking for a push higher again, just like yesterday. I'm going to look for areas where the market is likely to turn and continue higher, and stock those areas against my stock zones, these gray bands. The secondary is to push into 61.25, attempt higher, and then an immediate push higher on the secondary, and then consolidate up in the 66.75 for a continuation of 72. I'm looking for the breach still of that. Looking for the breach of that weekly high at 72 at some point today or tomorrow. At some point this week, we are likely to breach that high. The way we've been trading is we've rejected every test lower. You look at every test lower back here, we end up above it the next day. So I'm expecting the same. The third scenario is we push higher 61.25, fail. This is very unlikely, but we end up throwing in some shorts, or some sellers step in, and we move back towards 26.45 or so to consolidate into the close scenario 3. So I'm not expecting that to play out much today, but still ready for it. Okay, so that's all I have for you. I guess my connection got cut off or something, but I'll repost the video if it did, or you can just replay the video to catch up. Okay, good luck.